What's going on, ladies and gentlemen? Welcome back to another video here on my channel. Today we're going to talk about gap fills and how you can use them to your advantage in trading and understand where you should most likely sell your position if you ever find yourself taking a position on a stock such as the one on the screen, which is ANW. So to clarify, today we're going to look at a couple different time frames on the stock chart so that way I can help you understand why stocks move the way they do. So in this video today, we're specifically talking about gap fills and how when they run up, they'll hit resistance and start falling out. So what I want to mention here is the stock ANW. ANW was a recent penny stock that had received a lot of hype. So as you can see here on my chart, ANW peaked out at 1264 and started going down from there. All right, and I want to show you how you could have easily identified that this 264 area, 280s right in this area would have been the point at which the stock ANW was going to stop out at. And how are we going to do that? Quickly, we're going to go back and look at a 1-year time frame. You see this yearly time frame and you see this gap in the chart. Let me delete my drawings. The gap in the chart is this right here. This is what I'm referring to, this gap in the chart. Okay? If you ever see something like that, if you ever see a gap in between the chart, that is what we call a gap, because it literally is a gap in the chart. You will commonly come across a term such as a gap fill, or you may hear a trader or myself saying, I'm playing the gap fill, which means we are playing on the idea that whatever stock, doesn't matter, if it recently had gapped down or gapped up, you may hear the term, I'm going to trade the gap fill, or I'm looking to sell the stock as it starts to fill its gap. What we mean by that is exactly this. Let me draw this across. Remember how I said this is the gap? Now let me draw it across. If the stock comes back up, you can see that it filled some of that gap, right? So the gap, and I'll use arrows this time, the gap started at this red arrow, and the gap ended down at this blue arrow, okay? Now on this right side of this square box, the gap fill would essentially be from this green arrow up to this yellow arrow. If the stock gapped down from the red arrow to the blue arrow and then went from green to yellow arrow, that means it had originally gapped down and then it came all the way back around to fill that gap. Does that make sense? I hope it does, because that's pretty clear. All right, so that's what we're talking about. Whenever you see a gap in a stock chart, that means that the stock most likely, no, not most likely, it means it did gap down. And if you ever hear someone say we're going to trade it for a gap fill, that means they're hoping that the stock in some point in time comes back to fill the gap that it created in the chart. And if I may, statistically speaking, 90% of the time, all stocks that gap down or any stock that gaps up, 90% of the time will fill the gap at some point in its life. Doesn't know when, we don't know how long, but at some point, 90% of the time, any stocks that gap up or down will in turn fill that gap on their stock chart at some point in time. Whether we know the day or not, that's completely random. But again, 90% of the time, all gap fills up and down will fill themselves at some point in time on the stock chart. So please do remember that. Secondly, what we're talking about here, and I'll show you, is anytime you see a gap like this on the chart, it comes from a significant move in the price action. So what I'm going to do here is we're going to go to a 30-day time frame, or sorry, a 30-day chart. Here we go, 30 days. And what are you going to see? You're going to see the gap down. Here, I'll use a 5-minute chart. Okay, so this was a big move up, but if we scroll back enough, we'll see this big move down. You see this massive move down in after hours trading to pre-market trading. This big sell-off right there is what created, again, this big sell-off right there in the chart is exactly what created that gap down. Ready? Let me delete this drawing off. Ooh, let me get that out of here. So again, that big sell-off, that is exactly what created this big gap in the chart. Do you notice this gap here? let me circle it, this gap right here, you notice that gap right there? That gap in the chart came from just the other day's trading, and I'll show you. That big push in the market, pre-market there, this big push, circle it, that big push right there is exactly what created the gap on this portion of the chart. From there to there is that big push pre-market. So if you ever see any gaps on the chart like I've just presented, it comes from a stock either moving a significant amount in after hours trading or in pre-market trading, not in regular hour trading during the market open. Okay, so anytime you see a gap in a stock chart, whether it's up or down, comes from a significant sell-off or a significant buy in pre-market or after hours trading. That's what creates the gap in the chart. So if you ever hear someone like myself saying we're trading the gap fill, it means that a stock recently gapped up or down and we're trading it in the direction in which we feel it's going to fill that gap. So more importantly, remember how I said it peaked out at 264 here, or the stock peaked right at 264? You would know that, it was most likely going to stop running around this 264 area and start selling off because it was running right into resistance, or the stock had pretty much filled its entire gap. All right. So if we go from here and look back at the yearly chart, and go back to this yearly chart. Okay. So if we take a peek at this, all right, and we go, well, the gap down started here and it gapped all the way down. It traded sideways and then miraculously it picked back up and started heading higher. We can say that it's probably going to go at most as high as when it first started gapping down, and it probably won't go much higher than that, at least for right now. Why? Because this gap down creates a significant identifiable level of resistance. Meaning if the stock were to come back up all the way and fill its gap, it will most likely run into resistance right at about 270, 280, or 260. What did the stock do? And let's see, what is that line right there? This line that I just drew is 278. The stock actually stopped at about 260, which was right about here, right about there. So where I drew that next yellow line, that's 263. And again, if we go back to the 5-day chart, and let me get these old drawings off, you can see it stopped at 263. Ready? I'm going to draw a horizontal line right at 264. Oh, that doesn't work. I have to go back. 1 second. So right there, that's exactly where the stock had stopped pre-market, right about 264. All right. So now when I map that off, it makes sense, right? The stock was trading, gapped down, went all the way, gapped back up, and ran up until this green line, which means that the stock had primarily filled its gap. And that's what we talk about a gap fill, or trading a gap fill. And that's also how you can map off a resistance area or an exit. Okay, that's how you can map out your target to getting out of a trade based on this gap down, gap fill, is to look at where the stock gapped down and how much room does it have to go up before it starts getting near the start of the gap down and where we're going to start running into resistance. Okay. Another way you could have done this is by mapping off a ton of different levels. Ready? I'll do this too. Okay. So you don't only have to map off the gap fill area, or sorry, you don't always have to map off just the gap down start. What you could have then done is once the stock gap down, it means that each and every one of these low points from previous will be a resistance spot. Mapping all these areas out. And even right there. So all those green lines I mapped out are all potential resistance spots. Once the stock gapped down and started trickling back up, all these green levels were different resistance spots where the stock might stop trading upwards. And sure enough, it just happened to pick the 264 level, which was right about there. Okay, so if we clear these drawings off and we look at the time frame now, you might be able to see some type of, pattern, which is all these resistance levels, these green lines might in fact act up as a support or resistance. And sure enough, it stopped out at about this green line up here, right around the 264, 270 mark. All right. So that is primarily the route that you'll take when trading gap downs and you're looking at trading a gap fill. So whenever you come across a stock that has a gap down, make sure to map off the resistance levels before you start trading that stock. So hope you guys liked the video. Please give me a like, thumbs there, share, subscribe, and any questions you guys have, please leave them in the comment section below, as that helps me kind of organize which videos I should do next. So thank you guys once again for tuning in, and stay tuned for the next video.